What's good, YouTube? This is your boy Star Gen Z, and I'm back again with another video. So if you have ever wondered how someone usually know when to buy or when to sell any asset in the market, I bet you are not alone. In this video, I'm going to be sharing how I usually look at the market using top-down analysis. How I usually analyze the market from the higher time frame right down to the lower time frame and know exactly when to buy or when to sell. So in this case, I'll be using USD JPY I'll be using USD JPY. So first of all, I use four time frame. I use mainly four time frames: the daily time frame, the 4 hour, the 1 hour, and the 15-minute time frame. So the daily time frame is just to know the overall bias of the market, the overall bias of the market. So here the market is clearly in an uptrend. The market here is clearly in an uptrend. That's just what I need to know when I'm on the daily time frame. Then I'll move down to the 4 hour time frame. On the 4 hour time frame, this is where I will mark the structure of the market. This is where I will be marking the structure of the market. So from here we had a change of character, Then we started having break of structures to the upside. Break of structure. And this is the recent high the market created. That gave us another break of structure to the upside. So on the 4 hour time frame is mainly to look for my market structure, the recent market structure. I'll move now down to the 1 hour time frame. So on the 1 hour time frame, what I'll be looking for is the recent market structure, on the 1 hour time frame. So on the 1 hour time frame, the market have created this impulsive move to the upside. So we are waiting now for a correctional so we can catch another impulsive move to the upside. So what I'll do, I can use my Fibonacci to plot from the recent low to the recent high. I'll be having my premium. So when I plot from my recent low to the recent high, anything below the 50%, I'll consider this zone as the discount zone. Then this zone up above the 50% as a premium zone. So if I'm buying, I want to be buying when the market is right down here at the discount zone. So when the market is, I'll be buying if the market comes back down here to the discount zone. So I'll mark this zone. We're having all of this zone as our discount zone. But it doesn't mean if the market comes back down here, I'll just be buying the whole of this zone. Now I have to make some refinement. I have to check now for fair value gaps and other blocks. So fair value gaps are just imbalances that the market usually creates, either when the buyers have overpowered the sellers or the sellers have overpowered the buyers. But in this case, this is in a bullish scenario. That means we're looking for bullish fair value gaps. That means the buyers are more stronger than the sellers. So this is the zone I'll be focusing on. Then I can delete this big zone. Why will I be focusing on this zone? Here, there's a fair value gap. So in every fair value gap, there must be an order block. Every fair value gap, there must be an order block. So that is why I'm focusing on this order block. and also because it's in a discount price. There's also another fair value gap here and another block, but I won't be focusing on this one because this one is at a premium level, but I want to be buying at a discount. Also, there is liquidity here. There's liquidity on these lows. Liquidity means there are there are traps here, like there's money here which the market needs to come back down to sweep the liquidity to take that money before continue its way to the upside. So I have liquidity on these lows. Can mark it with a dollar sign. Then I'll be waiting for the market to come back down here, take out this liquidity, then I'll be looking to buy. I'll go now down to the 15-minute time frame. On the 15-minute time frame, this is where I'll be looking for my entries. On a 15-minute time frame is where I'll be looking for my entries. So I'll just have to wait for the market to come back down here. I have my confirmation, then I'll be buying. I keep on waiting, 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 waiting. And eventually this liquidity down here has been swept. So what I need to do now is to mark now the recent market structure on the 15-minute time frame. So marking the recent market structure on the 15-minute time frame, this is break of structure. This is a break of structure, and this is also another break of structure to the downside. Though this one is tiny, but it have to be considered. Because here I'm looking out for my entry. But since on the 15-minute time frame, it shows that the market is now bearish. I have to wait for the market to turn bullish on the 15-minute time frame, then I'll be buying. Because the market have to turn, like we are in a bullish market. If the market creates an impulsive move, it have to turn bearish on a lower time frame to facilitate the pullback. So this is our recent high. So what I'm looking now for is for the market to come back down here, break this high, come back down to a certain fair value gap or other block, then I'll be buying. So I'll wait. Okay, eventually this high have been broken. So I can mark this high now as a change of character. I'll mark it as lower time frame change of character. So what I'm waiting for is for the market to come back to fill this gap, then I'll be buying. So I wait. The market have created another tiny break of structure to the upside. Break of structure to the upside. But I'll still be waiting because this is the zone. This is the other block which I want to be buying from. This will be considered as liquidity. Okay, and eventually the market have come back to this my zone where I wanted to be buying, and it have shown bullish sign with this bullish candle. So this is like a confirmation that I need to be entering. I could have entered right down here, but at least you have to wait for the market to actually show you that buyers are willing to start coming back into the market. So after this bullish candle, I can take my long setup. I can be buying now here. Then my stop loss have to be below this low. Just a little bit. Then I'll be targeting this high. Now let's see how it plays out. And just like that, I've hit the mark. The trade just went straight to TP. So that's how I do my analysis, do my entries on, like, from the higher time frame down to the lower time frame, which I usually take my entries. Let's just do a quick analysis on what the market might do next from here. We have had this break of structure. Let me delay this setup. We have had this break of structure. I use my Fibonacci tool as well. I mark from the recent low to the recent high. Then I'll be focusing on the fair value gaps and other blocks that are in this discount zone. This is one, and this is two. Can delete now this big zone. So when I'm having two other blocks, this first one will be considered as decisional order block. Let me just name it as DOB, decisional order block. Then this other one will be considered as extreme order block, EOB, extreme order block. So what I'm waiting for is for the market to come back to this decision order block, show me signs that it wants to be going upside, which I'll go down to the 15-minute time frame. Then I'll look for my confirmation. If I have my confirmation on the decision order block, I'll be buying. But if I don't have a confirmation here on this order block, I'll be waiting for the market to come back to this extreme order block. Then I'll be looking to take the buy from there again. So you have seen how I usually do my analysis from the higher time frame to the lower time frame. If you want to know exactly how I usually know when to enter, like my trade confirmations, my conferences, and everything that I have to see before I enter a trade, make sure you subscribe to this channel, give this video a like, and share this video, because on my subsequent videos I'll be teaching you how to spot valid fair value gaps, invalid order blocks, and also my exact strategy how I trade. So make sure you don't miss out on my next videos.